Hello and welcome to this video. It's MF INCOOM. It is my end of year review. I actually made a lot of these slides earlier in the year, but never got around to doing it. I just want to talk about this year, sum up what I've learned, and looking forward as well. It is called Know Thyself because I really think the aim of this year and the bear market is to know thyself. Before we move on, I want to remind you that none of this is financial advice. If you want financial advice, go seek a financial advisor. Okay, know thyself. So for me, during this period, I started a crypto journal, which allowed me to clarify my thoughts. It helped me with potential portfolio construction and to log trades that I did make. I think this was one of the biggest things to just level up my overall game in crypto. So that's something I'm going to keep doing moving forward. I don't write in it like necessarily every day or whatever, but it's good to have that that space just to like let go and just write and let things come out of you, and then you start to explore ideas. I would say having these videos is a similar form of like crypto journal, a little bit more formal and a little bit more final in my ideas. I have stacked cash this year. It has been the best performing asset, and you can tell by checking the DXY, which is the dollar currency index, which compares the dollar compared to other currencies and its relative strength. I never knew what the DXY was before this year. So actually this year, I guess it leads into the last point of researching into macro conditions is probably the biggest thing, like treasuries, bonds, yields, the DXY and all these things are things that I've like understand more than what I did before, and having that knowledge now, I feel like I will be better moving forward. I think that's really important. I've been researching new chains, protocols, and potential narratives that I could cling to, and looking at applications that support my portfolio plan. Portfolio plan is a very important part to how I think about the space. We've had a whole year of planning, like what do I want my portfolio to look like in the next year, and it does take a lot of my brain power, knowing exactly like how am I going to split the funds and what will happen once it's time to take profit, or am I staking, or am I just holding, all these things here. So yeah, this is how I've got to know myself this year. The crypto portfolio trilemma. So this was kind of how I wanted to visualize my portfolio, breaking it down into three sections. Let's start from the bottom right corner, which is the short term, which is actually the savings, which kind of is a bit counterintuitive because you think your savings is what you hold forever. Yes and no. It has the stabilizing effect on the portfolio, which is very good during these crazy volatile times. And you plan to stack during austerity and spend during prosperity. So there'll become a point in like next year when it's like the accumulation phase, or capitulation and then accumulation phase, when I'm going to use up all my savings that I've used up this year in order to buy those assets that I've been waiting to buy. So that's why it's the most short term for me right now in the portfolio. Hopefully in 6 months time, my savings, I will have basically no savings left, because it's all going to be put into different assets or tokens or coins or however you want to call it. So I'm really sick. It's not a great time to be alive right now. Capital gains, which is going to be the midterm. So it's going to be adversarial because I'm going to be selling to the people that come in later than me. It's going to be the growth part of my portfolio. It's going to really, this is the thing that like will 10x the portfolio size or more, and it's just buying some to sell it. This is important basically for the growth part, isn't it? Why is it midterm? Because I expect to have maybe a year of accumulating these assets, and then maybe after another year of favorable conditions, maybe I'll look to sell them. And then the last one at the top is the INCOOM part, which is going to be the longest term. And that is the crypto enterprise, the business, the things that produce money and the things that will be here in years to come. And what I've been focusing on, the protocols that are making money, but pass it also onto their stakers, which obviously that's how I get exposure to that. And long term, because this once I start accumulating and staking these certain tokens or being a part of these protocols, I hope to hold these for, I mean, a lot of them have a 4-year lock, but it could be longer than that. You know, the next 10 years, curve in 10 years time, what does that look like? That could be amazing. So that's how I've broken down my portfolio for myself and how I like to think of the portfolio, and how I'm going to construct it. The weighting, again, is a whole nother side to it, and I think the weightings actually change depending on the stage of the cycle you're in. That is for me to figure out for myself and for you to figure out for yourself. It's not something that I have fully worked out or optimized for yet. I'm not sure if it's possible to optimize for it, but I'm just putting it out there. So today I learned, in hindsight, so getting to know yourself and to really understand like what makes you good. Let's just go through some maybe things that I deem that were good. So my long-term presumptions about crypto have been decent. Long-term presumptions. Like I choose to invest in Bitcoin back in 2013, before it was cool, before it got all this hype, all that money was in. There was a bit of money in it, but not loads of money in it. I saw the technology, I read about it on Reddit, and I was like, yeah, I believe into it. I didn't put loads of money in, but I did put money in and then left it there. That was a good investment. My time horizon was good. My thesis was good. And how I executed that by buying and holding it was the right strategy. Next one is using a ledger to interact with the blockchain. Have I ever used a hot wallet? Like, yeah, I think I did. I started to use a wallet at the start, but once I knew that I wanted to take it seriously and I had something worthwhile and worth protecting, I knew straight away to get a ledger. And this has probably saved me from getting rugged or hacked, or however you want to put it. So I understand from a long time ago that the security part of it was really important. Then the last presumption that I have that I found to be correct is like focusing on DeFi and the self-custody aspect of the crypto space. I can remember there was a time when I did have more money on these exchanges, and I was trying to trade and do things on them. But I soon realized, once I got exposed to DeFi, that DeFi was the way, and centralized exchanges were not. And as events have been unfolded this year, that has been right, and self-custody has been the correct thing to do. You do not trust other people with your money or my money. That's how I choose to interact. So some things then on the flip side, the bad things, the short-term decision making that I do tends to be bad. For example, when to buy. I'm going to bring this back to the Bitcoin. I think when I bought it in 2013, it was near a peak when I bought it. It was about like $80 when I bought it. And yeah, it was a peak. So even then, I bought it at a bad time. If I'd waited a couple months, I would have bought it for probably half the price. If I'd bought it a couple months before, I would have bought it for a lower price as well. So I basically bought the top in 2013-ish. And but luckily my time horizon was long enough for that to like mitigate itself out. I have done some purchases this year of some assets, and I found that my position size is too big. I have been reading some books recently. I'm going to this look. A lot of the traders and investors talk about the position size of beginners is about 3 to 5 times too big. And looking back, I'm knocking something here. Shut up. And looking back, yeah, my position size was too big, and I should have made it smaller. Yeah, so that's one thing. And then the last thing is patience. The reason why I was able to buy Bitcoin in 2013 and I was able to hold it for those years is because I left the country, left my computer for a good few years, no interaction, didn't even think about like crypto at all, and that's how I was able to survive. If I had followed crypto every day like I do now, I probably would have already sold it like 2 weeks later and then bought back in at a higher price than so, like, yeah. So the patient side is so important. I think this year I have demonstrated patience, to an extent. To an extent, I could have been better, but can't we all, eh? So I think that goes on to ask the question, like, do I play to my strengths or improve my weaknesses? It's probably a little bit of both. You do find those same traders talk about you need to work on your edge, like that is your strength and that is what gets you the one up over everyone else, is your edge that you have compared to everyone else. Yeah, so the position size is too big, and yeah, if I do want to trade badly in my own time, I should do it with $10, $50, $100, not messing with the 1,000 that sometimes I do. That's my bad, and I will try and learn. I think I've learned from that. I'll do my best to learn from that. So here's like a rough draft of maybe how I think about a couple different assets. Some of these tokens, I made this slide a while ago, didn't I? So like this Solana on there, I think that's off the cards for me. Not necessarily 100%, but at the moment I'm not so interested in it. Maybe even Cardano, I'm not really that interested at the moment. However, that might change, and just because I say something doesn't mean it's true, or that is something you should do as well. I'm just saying for me. So I think rather than focusing on loads of different tokens, I'd rather have like a couple of good solid L1s that I want to invest in for exposure to the market. And I think I could easily get a 5x off most of these tokens. Probably if I was to get near the bottom, easier 10x, but we'll see. I can't guarantee gains, but most of them there I think will be around for a while. Go on then. I'll show out of all them. We like Ethereum, and I think my second favorite is going to be Matic at the moment. I'm not going to say anything else about any others, but yeah, we'll see. Then I got the INCOOM part, which Frax, Convex, Curve, GMX are all like great INCOOMing opportunities. I think I have the highest conviction into these four protocols. Going back to the cap gains at the bottom in red, it says don't go all in, don't spread too thin. That is what Noah Seidman says, and I agree with that. There's no point having 10 different INCOOMing projects of each. I've got a small portion of my portfolio in, and trying to make money from that. I think picking a good couple solid projects, for me the Frax, Convex and Curve are like the strongest infrastructure in the space. I think GMX is pretty special as well, and also because we also mentioned how this is the long-term investment. Imagine in 5-10 years like what the TVL of Curve will be and the volume that it will do. I hope that I will have exposure to that, because I think it will really increase over time. And then finally, to save, I think like that Bitcoin, Ethereum and dollars are like the three assets that really interest me long term. Yeah, Bitcoin's a little bit boring now. Ethereum's cool, and dollars, yeah, all right. But to weather every storm, I think you've got a bit of everything there, and maybe it'd be these assets that I'll be saving into in the long term. I put in red at the bottom that try crypto is a way to express those three currencies together, but we'll see. So here I'll go more into the try crypto idea. And there's another video I did actually on impermanent loss and strategies during the bear market. So I would recommend like going back and watching that. But basically, it could be a good way to save. And what's cool is that by staking them, you can get, here it says I can get 10% in Curve, and on GLP, I could get like 20% paid in ETH. So to me, that's quite good. And this would have to be a long term hold really to make it worthwhile. That's just something to think about here. Okay, so not your keys, not your crypto. So this was one of the newest slides I made, which, you know, from November the 8th, I believe the day was, wasn't it? That is the day. And that really ruined everyone. And it kind of went back, it like didn't affect me because my thesis regarding self-custody and not your keys, not your crypto, was been installed for me for the past maybe 2 years or something. And so I would never leave funds on someone else's exchange, a centralized exchange. Let's just read what I wrote. Multiple hacks and insolvencies have led to many protocols and centralized exchanges going broke. Users are unable to withdraw funds. Their money's been lost forever. The best way to practice safe sex is to not have sex at all. You've got to trust no one with your money. That is probably the best not financial advice you'll ever receive. And I'm so glad that I have done that, and I've got my ledger to secure the transactions that I make, and nothing is held on a centralized exchange. I have been using my ledger as standard practice. I'm into DeFi, so I have very little risk exposed to centralized entities. This is part of my crypto paradigm, and this year has proved to me that self-custody is the way. So yeah, this year's just reinforced that for me. There's other ones, not just FTXs, like BlockFi as well, which I did use at a time. That was before I got into DeFi. I had a bit of Bitcoin on BlockFi, and then luckily I removed it because I realized that it's not. That was like last year, ages ago, in like 2021 or something. Like I removed it. So this led me down to learning about how I can increase my security even more. I'm going to be my own bank. Hopefully I can be my family's bank as well one day, and they can have their keys stored with like my devices and my plates, and they won't need to think about these things because I've done it for them. The BitPlate is a British company, and you can basically store your seed phrase on this metal plate. So it's fireproof, waterproof, and erosion proof. There's a great website. I didn't link it here, but maybe I'll link it in the description of some guy that goes around and tests all these different solutions for storing your seed phrase. This design isn't unique per se. There are other companies in America and all over the world that have something similar, but for me in the UK, this would be the one that I would get. You'd get a backup as well, and keep it in a different place. So I would suggest you guys look into that. Obviously, having your seed phrase on a piece of paper, it could be burnt, it could be stolen and read easily, it could be even getting water on it would probably ruin it. So and obviously if any acids or chemicals got into it, it'd be ruined. This can literally, this stainless steel plate that we have here can take bomb hits, a house falling on top of it, a fire, all these things, and it should still be able to It does still show the information, and I think compared to like having it written on a paper, the words are there, aren't they? Where here you have to kind of know what you're looking at to even understand what it is we're looking at, and so I would really recommend people looking into that. And the last one is I pre-ordered a Ledger Stacks, which is the newer ledger. I was feeling fancy, it's Christmas time, so I thought I'd get one of these. Looks kind of cool, and I do have a Ledger Nano something, and that works fine. That works great for me, and I love that. But I just thought I wanted a little upgrade. They look pretty cool, and it's a chance to just try it out and maybe give you guys a review when they come out in like April or something, March, April time. So I think with between the BitPlate and the ledgers, I think you've basically got what you need to become as safe as possible. I'll add on top of that, you can use a passphrase for your seed phrase. So it adds a whole, like it basically adds you, it gives you a 25th word and adds a whole nother level of security on top of that. So that's something else to go into. You should do that in your own time. So this is the plan of attack, the final plan of attack that I would like to do. So see, on the left you got me, and then on the right you just got a normal NPC. So this year was the year to sell everything, to survive and to stack cash. The crypto tourists were getting wrecked buying dips, and then they got rugged by bad sex. Centralized exchange, they left their money on FTX or whatever, or BlockFi and stuff, and they got wrecked, they got rugged. They leave the crypto space thinking it's a scam. Liquidity is drained from the space, everything goes down in price, everyone hates crypto. That's cool, I don't, I'm still here. Now next year I'm getting ready to make life-changing decisions and to accumulate tokens. This is where next year is going to be a big year. Yeah. Regulation is going to come. Regulation is coming. FUD is coming. A recession's coming, and I think most NPCs would prefer to spend their time and energy playing video games or other things. That's fine. I'm accumulating while they're doing their own thing. That's cool. In 2024, I expect the start of the next bull run to come, and by this time I'll already be well positioned with the tokens that I want to hold and being invested in the protocols that I want to be invested in, owning those pizza shops that are bringing me income, as well as having bought Bitcoin, Ethereum, Matic or whatever at a good price and of holding it, or maybe doing other things with it. I'm unsure, but by this point I'll be ready. And if I go on the other side, the bull cycle starts, and then the retail brings liquidity. So I've already bought my stuff, I've already accumulated. Then maybe at some point in that year, this cycle kind of starts again, and the normies are going to come in and start buying the coins that I've already bought, inflating the price, which is fine by me. Also, not even just buying the same coins as me, by me being invested in GMX or in Curve or other protocols. They're trading and using the protocols that I own a portion of, therefore I'll be getting those fees. Then I guess if it's roughly a 4-year cycle, by 2025, that is when we'll have peak mania phase. Everyone's loving crypto, but I will be selling at that point. I'll be stacking cash and I'll keep on INCOOMing. And at this point, all the normies are going to be saying it's going to $1 million, Bitcoin to $1 million, Doge to $1, all this thing, and I will know. Let's get out. This ain't the time for me. And basically, the cycle is going to repeat again, and this is how it works. Let's see what my last slide is. Okay, yeah, this is the sign off slide. This isn't the market to make money. It is the market to stack cash and to preserve wealth. Better opportunities will come. Know thyself. I hope you guys had a great year and a great holiday time. I hope you haven't been wrecked or been rugged. I hope you've been stacking cash. And I look forward to seeing you in the new year, where hopefully we can make some generational wealth together, have a great time, learning, spreading love, and hopefully I get to buy my family a nice big mansion in a few years. But we'll see, no promises, and obviously none of this was financial advice. I'm just giving you ideas of how I'm thinking and what I'm doing, and you should definitely spend your own time doing your own research. Just as I don't trust a centralized exchange with my money, you shouldn't trust me or anyone else with how you're going to determine your future. And with that being said, Goodbye.